Hey guys, how's it going, and thanks for coming. I'm Nick and this is Real Life Money. If you like this type of topic, don't forget to subscribe. So in this video we're going to be talking about negative interest rates, and that's for multiple reasons. Negative interest rates do exist, and why one reason it's huge right now is because the president just today on September 11th announced that he would want the Fed to decrease rates to 0 or less. Now I know you're probably watching this not on September 11th. However, if you guys have you knew anyone in September 11th, or worked for anyone or anything like that, heart goes out to you. We're all humans, guys, and I think we have to kind of respect each other a little more, especially what's going on right now. We need each other more now than ever before. Anyway, the outline of this video is we're going to be talking about what negative interest rates even means. This never really even happened before. Even the multi-billionaire, arguably the greatest investor of all time, Warren Buffett, even stated that negative interest rates just distort everything. So that's why we should probably learn a little bit more, given no one really knows what's going to happen. But then we're going to look at two different perspectives. The first perspective, we're going to look at how is it going to affect us, you, me, normal people that are in the middle class and are savers. The second perspective we're going to look at are investors. How are negative interest rates going to affect investors, how we're going to invest in the assets that we buy. And I will like to open it up. If you guys, anyone out there, because I know YouTube is everywhere, if you live in a country that has negative interest rates, definitely leave a comment below to let everyone know. You would probably have more information about it than we do, of how it's affecting you, or if you know someone, or if you know how it could affect us. We definitely need to talk about this. So first, let's just talk about what a negative interest rate even means. So let's say, obviously we're going to be talking about banks. So let's say you put money into a bank for savings, like a savings account, and they give you an interest rate, right? So let's say the interest rate is 1%, then you get 1% of your money. So if you have $100, you get $1 at the end of the year. Whoop-de-doo, right? Well, when it's negative, it seems so strange, but this is what would happen. If a savings account goes negative, then you're essentially putting your money in the bank and then paying the bank to hold it. Another example would be a bond. This is kind of getting into more investing. We're going to go over both sides. However, when you lend someone money, you would expect interest back, right? Well, with negative interest rates, you would loan someone money, and then you would have to pay them because you loaned it to them. It doesn't make sense because no one really went through this yet. So looking at other countries that currently have negative interest rates, I did look around. I did find out that Japan, Sweden, Europe, Denmark, and Switzerland do have negative interest rates. I also heard, I believe it was Sweden, they have negative mortgage rates. So essentially, if you borrow money for a mortgage, you will technically be paid to borrow money for that mortgage. Now, why this could possibly happen, if you think back to 2007, 2008, interest rates were, 4 or 5% or whatever, but then because a recession happened, they dropped it to 0, and we were 0 for years. And only recently they started to increase it. Well, it was, I believe it was in July, was the first time they cut rates since the Great Recession. They cut it 1/4 of a percentage point. And the market is expecting them to continue that decline, especially if the Fed in America is looking at other central banks. If they're going to follow them, they're probably going to be cutting rates as well. So the federal funds rate is the rate that banks will pay to take money from the Fed, essentially. So if the federal funds rate is negative, the bank will have to pay the Fed interest. Now, of course, if you heard anything differently, if you know anything differently, definitely let's talk about it in the comment section. But when the bank is going to pay interest to the Fed, don't you think they're going to pass that cost on to us? So that's why savings accounts will then go negative, because then we will be paying the bank to hold our money, and then they would use that money to pay the Fed. In English, you are punished to save money. Everyone's like, well, you should at least save money, save money, save money, right? Well, if you're actually saving money, the bank is taking some of that money, which is messed up. So that almost incentivizes people to not save money. So at this point, the next question would be, what do you do? Where would you put your money? Because you don't want to put it in a bank because you're going to have to pay them for that. What else could you do with that money? Well, that then goes into the investor's mindset of what other assets can you buy to avoid these possible negative interest rates. So that's how normal people can be affected, that they're going to be punished for saving. Now let's look at investors. Talking about negative interest bonds. So everyone knows that, I mean, if you're an investor, or at least you probably heard, that bonds are safer than stocks, right? People, if you're closer to retirement, you want less risk, you want to get into bonds. Well, if there are negative interest rates, that might not be true anymore. Because once they drop that, why do people invest in bonds in the first place? Let's talk about that. Well, there is interest on the bond, which is called a yield. So people invest for the yield. Well, if there's no yield because it's negative and you're going to have to pay to lend out that money to the bond, people aren't going to buy bonds. Also, you could look back to, I believe it was like 70s, 80s or so, interest rates were skyrocketing. And ever since then, interest rates were steadily declining. That's why if you invested in bonds, you wouldn't only get a yield, you would also get a gain on the bond, because when interest rates decline, bond prices increase. So investing in bonds made sense over that time. We're at zero right now, so that eliminates yield because there are none. So if you're looking for income, if you're closer to retirement, you want less risk, bonds might not be it. And let's say if we do go through a recession, whatever causes that, there are so many different factors. I have recent videos going over that. But let's say we go through it and we land on our feet. Whether that's possible or not, but let's just say, right? And we're still at those low interest rates, right? Where do you think interest rates are going to go? Probably higher. So when interest rates increase, bonds, their value decreases. So those are like two factors why bonds could not be attractive in any way. Also, as a side note, there are actually billions, I recently heard like 15, maybe up to like 17, probably more at this point, but like $17 billion are in negative yielding bonds for multiple reasons. There are some pension funds that they have to invest in low risk assets, so they have to buy these types of bonds. Or maybe like bond funds. It has basically a bunch of bonds in the fund. Some of those bonds are going to be negative. So there is a lot of money going into these negative yielding bonds. And this is why Warren Buffett states that it disrupts and distorts like everything, because the basic ideas in the investing world essentially don't matter because everything is almost flipped at that point. Well, guess what? That still leaves a huge question. where do you put your money? Because you can't put it in a savings account, because if those rates are negative, you're going to be paying the bank. You can't invest in what was normally safe bonds, because you're essentially paying to invest in a bond. So you really can't be touching bonds. What could you buy? Well, economists and investors and all those fancy financial news channels out there would say that's actually positive for other assets. For example, stocks, right? You can't save your money. You can't put it in bonds. So put it in stocks. Well, here's the issue with that. Let's first look at the idea of, if the economy has negative interest rates or zero interest rates, that probably means the economy's not doing well. There's probably a decline in the economy. At this point, there could be a decline in the world economy. So yeah, you might find like yield and dividend stocks, companies that pay a dividend, those could be seen as safer. However, if the economy is in recession, then all these stocks could be losing their value. But let's just scratch that out. Let's say it's not. Let's say the economy is great, just like all politicians are saying right now. But let's say that this does incentivize people to buy more assets like stocks. Well, then that would drive the price of stocks up, right? If you're looking back to 2008, the Fed dropped rates. They were buying a bunch of, essentially it was treasuries. But, bonds and stocks skyrocketed from there. So here comes the other issue. When something skyrockets, let me try to explain this. There is the real value of the company and then the perceived value of the company. So the stock could rise greater than the growth of the company, if that makes sense. So if people just keep piling into these stocks that grow much faster than they should, that could cause a bubble. So if we're not in a recession by then, that could then cause another recession, because that's a bubble, and then it could correct back down to fair market value. So yes, you can essentially invest in stocks. If you're investing stocks over the long term, 30 plus years, then maybe you could get into dividend paying stocks, because a dividend is going to be paying you more than a negative rate, right? Well, what if you don't want that risk? What if you simply are a normal person, you're trying to save your money? Are there other options? I mean, I guess you could always bury it in your backyard or under your mattress or something like that, like actually keep it. But I'm going to take the strategy and perspective of Ray Dalio, a recent video I also did, of diversifying your money. And he also talks about gold for a couple reasons. Because one, it keeps up with inflation. What inflation is, technically, if you want to get technical about this, prices don't increase over time due to inflation. Your dollar technically decreases over time. So like a car is always going to be a car, or a house is always going to be a house. You're going to need more money or more dollars to pay for that. So that's essentially what inflation is. Gold holds its value. So while the dollar decreases, gold stays the same. So Ray Dalio does talk about his all-weather portfolio around 7.5%. He would suggest to get into gold. Again, do your own research. Everyone's different. But other people also say to have, 5-10% in gold to preserve your wealth. Because in most situations, like if the economy crashes, stock market crashes, stocks go down, but then gold is a hedge against that, and that goes up. So of course these are all ideas, a lot of people are throwing them out there. We really don't fully know what could possibly happen. If you have ideas or are, again, living in those countries with negative yielding interest rates, definitely let's talk about it. Some other people say, like, because if borrowing would be negative, so let's say like a loan, if you take a loan out and the loan is negative, the bank would technically pay you to take money from them. That's what a negative interest rate is. Now that makes sense. However, like, banks make money off of loaning money to people. Do you think the bank would want to just loan out money and then pay extra money for that? I really don't think banks would actually want that. So that's probably not going to be a long-term, like, that's not going to be stable. That's not going to be a long-term solution for the banks whatsoever. And also, if you agree with negative interest rates, we would love to hear what you have to say. I really don't see any things why it would be a good thing. I know a lot of politicians, a lot of central bankers in other countries, they say negative interest rates are great. Personally, I could be wrong. You know, I'm young, fine. I don't see that. I really don't. If you could explain that to stupid me, then fantastic, but that doesn't make sense. Why would it make sense for you and me, middle class people, to trying to save money? We can't even save money. That's bad. And I do want to give a shout out. First of all, if you got this far in the video, then you're definitely interested in this stuff. So you're definitely above most people out there. Whether you agree or disagree with this, I appreciate getting to this point. I do want to give a shout out to another YouTube channel. I've been doing this recently because he deserves it. He doesn't know I'm doing this. He probably doesn't even know I exist. However, his channel goes into more detail about the economy, the overall economy, what the government's doing, the Fed, the president, all this stuff. His name is Gregory Mannarino. I'll leave a link in the description for you to check out, which I would highly recommend. He goes into great detail. He does a video every day before the market opens and after the market closes. I'm learning a lot from him, and you really need to at least expand your thought process, because there's a lot of things out there that we need to learn. So definitely check him out. So long story short, negative interest rates could hurt not only us, but the economy and maybe some other possible assets out there. If we do go into negative interest rates, could be possible dividend stocks, gold, or even silver. So if you guys have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. I kind of wanted to keep this at least somewhat of a basic level. Didn't want to dive too deep into it, because I think there are a lot of aspects involving this. So definitely let's talk about what we think with this situation. But thank you so much for watching, guys. I really appreciate it. Don't forget to subscribe if you like this, and I'll see you in the next one.